Okay, are you ready?
Yes.
Yes.
Brilliant. The floor is yours. You can start now.
Awesome. Thank you very much, Fang. Hi, everyone. Very good evening and very honored to kickstart tonight's graduation pitch. So we are Seedling and we are here to help you sow good seeds for good deeds. We exist to answer 4 problems in the Malaysian charity ecosystem. If you are a beneficiary, nonprofit, or NGO, you are likely to suffer from high fundraising costs, which according to the Star, reach up to 50 cents on the ringgit. And you might also have a challenge in connecting with the next generation donors, millennials, Gen Z, who demand digital first experience. If you are a donor, there's a lack of transparency because people like you and I cannot monitor the collection and use of funds. And of course, we all want sustainable funding for the causes we care about, but not everyone can afford to start our own private endowment funds. In Malaysia, many Muslims are familiar with Wakaf, which is a type of charitable endowment fund. It has massive potentials, including 67 billion ringgit managed by Islamic councils across the country, 2.5 billion zakat collection each year, 300 million charitable funds annually, and of course, 13 million adult Malaysian Muslims who are very eager to better the community. Seedling enables everyone to contribute to an Islamic mutual endowment fund, guided by 3 key principles: sustainable donation, sustainable investment, and sustainable reporting. So how do we work? Very simple. We pool donation as low as 50 ringgit and partner with robo-advisors to invest in Islamic compliant assets. We will then channel the return of this investment to NGO partners, while the capital stays invested to earn sustainable returns. Within this process, we earn a commission from the investment advisors that we refer to, as well as a platform fee from the NGOs that we help. Our solution is enabled by technologies such as smart contracts, virtual wallets, and robo-advisory, so that we simplify a donor's journey. Using our platform, donors can choose the cost to support and amount to donate, monitor investment performance, and receive progress reports from the NGOs that they sponsor. Seedling's unique model makes us Malaysia's first online and Islamic mutual endowment fund platform. Our peers include MyWakaf, which is a Malaysian government Wakaf initiative that runs offline, as well as Global Wakaf, an online platform based in Indonesia. With our first mover advantage in Malaysia, we intend to start strategic partnerships with reputable beneficiaries, as well as institutional donors, which in turn will help us claim first stake in the retail market share. Lastly, Seedling is very proud to be run by professionals from various yet very complementary backgrounds, ranging from nonprofit fundraising, data analytics, all the way to investment. And we're looking forward to answer any question you may have, because together with Seedling, you can sow good seeds for good deeds. Thank you.
Thank you, and judges?
Thank you so much. That's a nice presentation. Just give me a quick review in terms of the numbers, in terms of returns that are expected on the capital that an investor would put in, and what's in it for the investor apart from impact investment.
Thank you very much, Jasmine. This would be a question on revenue model, the fund flow, and my colleague Gerald will be able to answer.
Yeah, so for this, I would like to share our fund flow screen. Let me take you to this. So here we are using an example of a 30 million asset under management with an estimated return of 5%. So that will actually generate a donation amount of about 1.4 million with a platform fee of 5% and also a sales commission of 50%.
And so to answer your question as well, Jasmine, about what is it that the donors get apart from impact investing, We are improving on the current donation process in which they usually don't hear back from the NGO after they donate. So within our platform, we have a progress report that is done online through the platform itself so that the donors are informed every time a project is finished. For example, what is the success rate of that program, so that they stay engaged and they stay invested. They are motivated to continue donating. Hope that answers.
Yeah, hi guys. Good presentation. Danny here. Quick question. I mean, you'll be competing with the other agent-based charity, agent-based outsourced vendor, right? And you're charging 5% because you're on your own platform. I think they charge more than that. But how do you plan to market it better than them? What they do is basically they have people on the streets and hounding people and get that. I'm sure you guys are going to be cheaper than them, but how are you going to market it to be more successful?
Thank you so much, Danny. Very good question. Poon, perhaps you would like to take Danny through our go-to-market strategy.
Thanks, Adila. All right, basically the first part is we are going to go on a phased approach. All right, first is basically to engage the NGOs, I would say the more known NGOs, and at the same time, institutional investors, right? Because all the investors, all these institutional investors, they would have an allocated fund for these activities in terms of CSR, sustainability, ESG, etc. Now, that is the first phase. Second phase is, as you can see, second quarter of the year itself, we will go onto the ground itself, whereby we would have built up enough, I would say, branding, all right? And this is where the millennials, the Gen Z, this is where they themselves currently the issue is they don't know what to do in terms of, they want to contribute back. Their current thinking nowadays is, it's not so much on making money, but what is my purpose in life, all right? So this is where we are giving them an opportunity, an avenue, because these are small little guys. Say, I'm just a small little guy, I'm not an institution. How can I contribute back to the society? I only have maybe 50 ringgit, 100 ringgit, or 200 ringgit a month to do something good. And this is where it's not available in the market at the moment, all right? And this is a market that we want to address. As you can see, the new gen is now getting more vocal. They want to take charge of their lives and what's happening to their environment and their community. And this is an area that we want to address. This is one of the key areas, because this generation will move up to maybe in 5 years' time to management position, and that is where we will so-called address that market.
Poon, I have a question. How are you going to reach out to this market? Did you say you're going to go on ground just now?
Go on the ground, yes, in terms of the social media platforms.
On the social media platforms, not as in face-to-face.
Face-to-face, like I said, it's social media will be the first aspect, because these are the addressable market, and from there we will so-called strategize and see in terms of if they have a bigger portfolio to invest into, then we can go face-to-face.
Yeah, so as Poon said, we are going to partner first with the reputable NGOs. They already have their own market base, we would say, that we could tap on. And I think, our offering, how the funding is not just going to be exhausted after first use. It is something that is sustainable and will earn a donation for them as long as it stays invested. I think we could capture the attention of these reputable NGOs, and then access their market base from there. And as Poon said, we will be able to launch to the millennials and Gen Z with the primary contact being social media at first.
Okay, thank you. Thanks. Moving on from Seedlink. Next group, please.
Thank you very much.
please, yeah, there we go. When you're ready, and go.
Okay. Hi, good evening, judges, everyone. I'm Sri from Microps. We will be pitching our idea on farmers marketplace tonight. So just to give you an overview of the idea that we are about to share in a while. More than 70% of micro enterprises Micro enterprises constitute about more than 70% of all businesses in Malaysia and employ over 1 million employees. Deep diving, we've decided to focus on the subgroup of these micro entrepreneurs, which are farmers. And we've identified two main challenges faced by these farmers. First is financial inclusion. These farmers are most often situated in rural areas where the traditional financial services are often inaccessible and unaffordable for these farmers. Second is that on entrepreneurship sustainability. These farmers are often extorted by middleman agents who buy their produce in bulk at low price, and also suppliers who sell them at a high price. That makes the farmers produce little profit, and most often resulting in loan default and business failures. So having identified these challenges, we are proposing a model. Basically, Microps is a mobile apps, a marketplace. So what makes it different from other marketplaces? There's two elements to it. One is the actual marketplace and the other is the loan, innovative loan. So basically on this Microps platform, farmers will get loan from the development bank, and loan will be disbursed to farmers on Microps as credit vouchers. Now, farmers cannot cash out these credit vouchers. They will take these credit vouchers and bring them to suppliers to buy supplies, and the suppliers will come to the platform to cash out the credit vouchers. The same, farmers will go to the logistics service providers, use their credit vouchers, and these logistics service providers will come to Microps to cash out their credit vouchers. So technically, the loan stays in the system. It does not, it's not dispersed to the farmers in cash. And the other side is the marketplace to eliminate the mentioned problem of middleman agents just now. So we'll bring the distributors also on Microps where they can buy vegetables in bulk from farmers on Microps. Microps brings a lot of opportunities for the stakeholders on the platform. First and foremost, it improves the financial well-being of the farmers. Having now maximized their profit margin, it improves their livelihood and sustainability of their business, and also increases the financial inclusion and literacy. Also, this Microps is a trusted marketplace. It is not only a platform for trading to allow transactions to take place, but it can also become a social network for these farmers to exchange ideas, knowledge, tips. Microps will also build trusted relationship between stakeholders. In the process, develop credit history for these farmers. And also it increases traceability for development banks, thus lowering their evaluation and monitoring costs. And last but not least, that everyone on these apps using this Microps becomes tech savvy, thus it broadens digital footprint. Thank you.
Very good, judges.
Hi. So I'd like to just check in terms of your process flow. Can we go back to that slide? Yeah. Now, loans are disbursed as on Microps to the farmers.
Correct, as credit vouchers.
Now, how will the farmers turn these credit vouchers into cash?
It will be, this MyCrops is sort of like an e-wallet platform. So there'll be numbers on their screen saying they received this loan amount, and they can use it to cash out to the suppliers and logistics service providers. So it's basically an e-wallet.
How will you ensure that all of the ecosystem is on the e-wallet to accept this payment?
First thing, we'll approach the farmers. I mean, I think we think it would be a unique value proposition, because basically for farmers, you don't need to have any cash. If you're eligible, you can come on board and you can use these credit vouchers to sustain your business, to get your supplies. Would be very attractive to farmers. It's just a matter of educating them. And the suppliers usually would want to be on a platform as there's a lot of customers to reach out to.
Sorry, I have to add on to Jasmine's question. Sorry, Jas, I just want to check, right? What about farmers who actually live on hand to mouth? When you say they don't really need cash, don't think that's really a proper solution, right? And also, most of the e-wallets out there in the market, you cannot actually cash out. So how are you going to solve their problems, right? If, say, for example, they live in a rural area and they do not have access to places that does not accept e-wallet.
I think on a similar note, the education of the farmers bit, would love to hear more about that strategy, because the ecosystem looks nice, but there seems to be a lot of operational costs and onboarding. So yeah, it's similar to that comment earlier. How are the farmers really going to trust the system?
Hi, it is Satya speaking. I would like to try to answer your question. The first one about the farmers that don't get the cash. Basically, we want to push this investment to focus on investing on the crops or farmers, because with this platform, we just try to limit the farmers using of cash by delivering the product itself for investment and selling the right tools that farmers could use. And for the education part, we would like to try by educating them, because most of the farmers in rural area didn't know how to increase their productivity on growing crops. So basically, we want to solve the problem by educating them with our knowledge of technology, and also what kind of source that could help to increase their productivity, so they could invest more on the crops, and they could get more revenue from that.
Yeah, this is Neva. Can you hear me?
Yes.
Yeah, just adding on to that one. So initially, we might be using SMS platform for these tokens to be dispersed in the form of loans. And later in the phase, when we have educated these farmers via trainings and all of that, we might move into applications and all of that. So this process is going to be really gradual. Like we don't want to onboard all the farmers at the time, but we're gonna start out with a small pilot, test it out, and then gradually move into like more larger prospect and all of that.
Last question.
Have you considered, sorry, Kelvin, have you considered I'm assuming here you're not going to hold any inventory, right? So have you considered some of these physical limitations of whether or not you would hold inventory, given that the distributors will need to buy in bulk? And will MyCrops guarantee the quality of the goods? Because that's going to be another discussion that comes from this, right?
With the help of the data, we are assuming that we'll get enough information about how much produce, how much quantity the farmers is able to produce, so that we can negotiate beforehand with the distributors as well with the suppliers for the inputs. As for the quality, we don't have that solution at the time, but gradually I think we'll be able to develop and learn as the project progresses.
Last question from me, if I may. Yes. Where is your business case in terms of your profitability model? Where are you extracting your income from?
Yeah, sure. So this is our income revenue model. We plan to have commissions from our various stakeholders like distributors, suppliers, and logistic companies. And we plan to have 1% from the total amount of loan distributed from the financial institution we work with.
That's very heavy taxing on the farmers, which then defeats the initial thinking behind your what? Okay, thank you.
Do we
Okay.
have time? Yeah.
Last statement.
Yes, just adding on to that one, this cost is not going to be implicated onto the farmers because the monitoring and evaluation cost for the financial institution is going to come down. So we are expecting this cost to be paid by the financial institution we work with.
Okay, thank you, Microps. Moving on. Next team.
Thank you.
Thank you.
Okay, so this is Mashi from Super 7. I'll be sharing my screen now.
Fantastic. Put that onto presentation mode. Okay, off you go, Mashi.
Oh no, this is I-Ching. I'm going to be starting this. So hi everyone, I'm I-Ching from Team 7 and I'll be presenting my FinSnap to you today. Next. Okay, so this is Team Super 7 and this is our mentor. So here's the problems that we have. Do people really know what their financial standing is? And how do people plan for their future and retirement? They don't even know what they have. So many people don't have a consolidation of what they have and what they owe. And this leads to overspending, overdue charges, missed payments, bad credit ratings. In August last year, more than 300,000 people were declared bankrupt in Malaysia. Also, when somebody dies, the family has to piece all their financials together. And in Malaysia, in October last year, there was 7 billion unclaimed monies for both the living and the dead. So here's a solution for you. We will have a platform where people can view what they owe and own all in one place, so people can start planning for their retirement and know if they even have enough for the dream holiday. Our platform will send payment reminders, so there will be no more missed or late payments, and that's how they're going to save money from all these late fees. Families can also view all of the deceased's financial information in one place, which will help them save time in putting all the pieces together, and this will help them have no more assets that they won't know about. Mashi.
Okay, this will be the QR code for our prototype. You guys can scan it to check it out on your phone, or you can just click the link that we provided inside the chat there. Meanwhile, I'll walk you through our apps. So this will be our login page. You can just fill in any ID and password and click login. And by clicking financial overview, this is basically where you can view all your assets and liabilities at one place. And if you want to go to the detail, you just click on the button, sample assets. Here you can see all the deposits that you have inside your selected banks. And same goes with liabilities. When you click on it, you can see all your credit card and loans together with minimum payments and due dates. Also, at my FinSnap, you can view your total balance of your EPF account together with the amount that you have inside account 1 and account 2. So next will be continued by Stephanie.
So in terms of market sizing, Malaysia has close to 20 million mobile banking users and is growing day by day. My FinSnap target is to capture a total of 1 million users by year 5, which is a small fraction of the total users. Now let me share our revenue model. One, we are going to have the end users whereby free trial because we just love them, and post free trial $299, which is a totally affordable if we compare that to late payment charges imposed by the banks. Two, with the partners, we are going to have an advertisement fee, which is fully customizable to our partners' needs. Number 3, we are going to have a revenue sharing with our suitable partners in the future in order to maintain a strong ecosystem. I think the best part of all this is my FinSnap is totally borderless and we can roll out globally. In terms of the revenue projection, we have a conservative count of 1 million users by year 5, which is actually 5% of the total mobile banking users today. And I would say that is a very conservative small sum. With that, we are aiming to hit a total revenue of 73 million ringgit in a 5 years' time. Imagine the revenue opportunities that we can unlock beyond the 5% count and also beyond the borderless, whereby we can actually grow it globally. Our team Super 7, we are ready to take what it takes to execute our customer acquisition model, both online and offline. And with this, ladies and gentlemen, please consider MyFinSnap and join us in making a difference in the lives of the potential MyFinSnap users. Thank you for your time.
Very good. Questions?
Yeah,
Okay,
first
quick
one from me.
Sorry, go ahead. Go ahead.
Yeah, first one from me. How are you planning to actually bring together the asset liabilities of every single individual onto this? Is it a form whereby everybody fills in everything that they hold, or is there some kind of automated pool across the country?
No, the idea is you will log in to the app, and then you can link onto the bank. You basically authorize the bank to give access to their balances at that point in time. Bear in mind, these are a snapshot of the bank balances, and it's not historical records. So it will be at that point in time, that will be what the amount balances are. So the user will then put in everything, whatever banks they want to put in, as well as the liabilities, credit cards, housing loans, etc.
How do you track assets then? Sorry, Kevin. How do you track assets?
How do you track assets? Well, the assets here in this case would be basically current accounts, EPF.
I mean, as in property assets and all.
No, these are not properties. These are purely based on bank accounts and what is in the system under the central bank. So it could also be a unit trust. It could be whatever we can access by online now through our apps. We can access, basically, instead of going to Maybank to or CIMB Clicks, you go to our app, and then you can view all your assets, as in cash assets, as well as liabilities, as in credit cards, other debts, etc., in one platform. The credit card side will also maintain the minimum payment due as well as the due date.
Yeah, how do you compete with the other many other personal financial apps that is in the market now?
This is not meant to be a transactional app. It is purely for viewing. So the idea is you view
the viewing ones, the one that consolidate for you, not the transactional, not the bank ones, but the one that doing exactly. There are many of them doing what you're doing. How do you compete with them? What is your differentiation factor?
Basically, the whole idea would be there's a full access to everyone. With the freemium model, we expect to hope that more people will come on board. And as the numbers go up, then of course the banks will also see why they would need to be on board.
I would like to add on top of that, Danny. This is because in Malaysia we don't have such apps, right? So we are trying to cater this to Malaysian, as currently we don't have one consolidated account here yet. So that's why we also included the EPF because and together with your account, so that you basically can see all your money inside one platform. That's it.
The other selling factor is also the legacy bit, because basically people nowadays, when your loved ones pass on, we technically don't know how much unit trust they have, because without, they will not acknowledge us as one of the kin. So what we are going to do differently is, if you are able to give us the death certificate, then we can at least give you certain details that this particular sir has these few accounts where you can go and approach them, and then we will give that certificate to say, yeah, you can go ahead with that.
I have a question, Charmaine here. How do you foresee all these different banks and organizations who actually open up their APIs for you to connect to them in order to give you the information? I know it's not transactional data, it's just a screenshot. Having said that, there's going to be a lot of development involved. How long do you see, what is your go-to-market? How long is it going to take? And what are the consent that is actually being required here?
For the first question, there are other players already out there where you can access. I think you know a wallet app on Apple, as well as Yep, Alfred. There's a Yolt, I think, overseas. Basically, you can still access banks, and banks have already done it. So we don't expect any reason why other banks won't do it. We have spoken to industry practitioners and as well as in the regulators, and they're open to the idea. They're quite happy to explore further. Going to market, of course, development will take time, and but we know this is something similar to SG Findex, we understand that took 3 years to go to market. So of course, we get something a lot earlier than that.
So how do you intend to market this from a perspective that I have to pay 2 ringgit 90 or whatever the amount just to look at my bank account snapshot, no doubt as a summary on a platform? Is that your only income stream? And when you say that you are looking at ad space and partners, how are you going to monetize that? Because if it's just static or flashing information without an opportunity to interact, what are your profitability model base?
Okay, first of all, we're looking at a freemium model where the first 3 months are free. So that would hopefully bring people on board. Secondly, if you are, let's say, late on your credit card or your housing loan or your car loan, penalties could be as high as 50, 100 ringgit. So we feel 299 per month is fairly reasonable to save savings. In terms of, sorry, what was the third question?
How do you intend to monetize?
Yes. Okay. Basically, there will be apps, or rather, there will be links where other banks or insurance companies or even wills can then tap onto it. We would, of course, have a referral fee, which would be paid upon click or even upon success rate.
Okay. Thank you.
To also add on to Azam's point about there being, we do not foresee any problems with the regulators, because Bank Negara has already issued a guideline in January 2019 on open API, and so there is already a directive, and we are also speaking to some of the other regulators at the moment to consider our solution on how to connect, work together on the platform.
Okay, thank you.
Okay, very good. Thank you, Super 7. Next team, please.
Hello.
Hello.
Hi. This is
Team
Hannah.
11.
Yep. Let me share my screen.
Sure.
Hi, can you see my screen now?
Yes. If you can put that in presentation mode, that'd be great. Thank you.
Okay. Okay. All right. Hi. So I start now.
Go for it.
Okay. Hi. This is Hannah from Team 11. So I'll be representing my team to present our business case today. As we all know that there are a lot of unbanked borrowers, especially in developing countries and in undeveloped world. And at the same time, we also have a lot of people who are looking to actually invest their money into higher returns investment rather than just putting the money into the banks, earning about 1 or 2% in just fixed deposit rates or invest in treasuries and commercial bonds, which we know that the yield has come down significantly due to COVID. And so we think that P2P lending is actually the answer for this. And P2P lending platforms are not unfamiliar with people right now, but how are we different? So here, our target market is actually in Vietnam factory workers. And why Vietnam and why Vietnam factory workers? Let me explain. So Vietnam, they have a population of about 97 million people, and 70% of their adults actually unbanked. And in terms of factory workers, they don't have a statistics of how many people are working in factories right now, but we have a statistics stating that there are about 10 million people who are working in manufacturing industries. And those are considered as workers, meaning they do blue collar jobs. And because they belong to the group of low income,
I can't hear you.
Hello, hi.
Hannah, you're on mute. Yep.
Yep. Hi. So we assume that half of those people are currently unbanked, which is very conservative because I believe the number could be even higher to 60 or 70%. So even if we assume half of those are unbanked right now, we have a population or a target borrowers of about 5 million people. And 5 million people, that equates to almost the whole population of Singapore. And there's also statistics stating that consumer finance market in Vietnam was worth about $30 billion by 2016. And if GDP in Vietnam was growing at 7% per annum every year, and consumer finance market should have grown much more significantly, this number could have grown to about 40 to 45 billion right now. So COVID-19 was also accelerates the shift of production from China to Vietnam. So we have heard a lot of factories, a lot of companies actually move their productions from China to Southeast Asia, and Vietnam is actually one of the main beneficiaries of this move. And this also means that there are more and more workers who will be working in factories and earning more stable income. So these actually present huge opportunities for P2P lending to target this particular part or particular to these factory workers in Vietnam. So our business model. This is our business model. So we are a P2P lending, and just like other P2P lending platforms out there, I'm not gonna fluff you guys with better technology or whatsoever. Our difference here is that we are thinking about what kind of interest rates that we should charge the borrowers, and also what kind of interest rates we should promise to pay the lenders here. So the current interest rate charged by big consumer finance companies in Vietnam right now is 30% to as high as 50% effective interest rates per annum. That's very high. And if you're talking about loan sharks, a lot of people are borrowing money from loan sharks, and they can charge you as high as 100% effective interest rates per annum. So we are proposing to charge about 20-25% interest rate. I will explain why we charge so low later. Also, at the same time, the current fixed deposit rates in Vietnam is about 6 to 7% per annum. And if you invest in some of the commercial bonds, it can pay you as high as 10%. So we propose to offer the lenders or people who put in the money into the platforms about 12 to 15% fixed interest rate. So this would entice them to put the money into with us to lend to the borrowers. So the net interest earned by the company will be ranging from 8 to 13%, and this would be our profit.
Okay, Team 11, wrap up, please.
Yeah, so assuming that the credit cost can be managed as low as 2 to 3%, then our net profit earned after accounting for credit cost could be from 6 to 11%, and all of this would go into the company. And after you minus off the operating expense, that would be about 5 to about 8% of the total capital. So
okay, thank you, Hannah. Judges, question and answers.
Yeah, hi, Kelvin here. Hi, Hannah. Unfortunately for you, I'm very interested in high risk lending. So let's look at the math, right? You are paying 12% per annum. You are charging 25% per annum. Your spread, you believe, is between 12 to 13% per annum, and then after you've taken away costs, you're left with whatever 6 to 11% per annum, right? Give or take. Now, in this entire model, you haven't put into consideration default. And in this segment, your default rates are going to be anywhere between 15 to 30%.
So the default rate is actually that credit cost that I say that can be managed as low as 2 to 3%. And the reason why we think that this credit cost can be managed it's not going to happen. It's not going to happen on day one. So on day one, you're going to make losses, just like other consumer finance companies out there. I'm not going to say that like you're going to make this amount of profits on day one, but in 5 years, after you accumulate all of your information about the background, the credit profile of your borrowers, the credit cost can be managed as low as 2 to 3% because the interest that you are charging to them is 20 to 25% only. And also we have, sorry, I couldn't finish my presentation, but we have other processes afterwards to actually manage the credit cost. Firstly, we only target factory workers with pay slips. So there are two types of factory workers in Vietnam. One is that they have no access to loans from the bank.
Sorry, Hannah, slow down a little bit.
Yeah,
let's just make it realistic. What is the current default rate of this particular segment in Vietnam?
So for consumer finance companies, some of the big ones, they are doing about 4%. But they are charging them 30 to 50% effective interest rates. So if I am charging them at 20 to 25% interest rates, not only that I can capture market shares from them on day one, I will also be able to actually entice the workers not to walk away and default on my loans and borrow from somewhere else. Because somewhere else, if they're gonna borrow from somewhere else, they will have to pay much higher interest rates. So
I get it. So you're saying the default rate is about 4% in Vietnam in this particular segment.
For
Is that
consumer
correct?
finance, yeah, consumer finance, and that includes various. So it's not only so people who have no salary as well.
Yeah. Okay.
No
sure.
official salary. Yeah.
Okay,
So
Hannah,
2 to 3% is not. I don't think it's unreasonable. Yeah.
what is the return to the investors to your P2P?
So I guess with this, in the long term, you will see a stable return ROI at about 20 to 25%.
And is that factored into your cost of funds?
Cost of funds.
Yeah,
Sorry.
because
So
you're...
the thing is that we are not gonna take on the we are not gonna take these loans onto our balance sheet. So all of the funds to be provided by the lenders is not from the company's capital itself. So on day one, if we can't attract enough capital from the borrowers, from the lenders, we can put in the company's capital inside. But mainly the company's capital will be used to develop the platforms, to pay the developers, to pay for marketing and operating expenses.
Okay, you need to explain a little bit more because the numbers don't make sense to me right now.
What number doesn't make sense to you? Sorry.
In terms of how you are balancing between the credit cost, your cost of default, your cost of funds, and then maintaining the platform cost. And then what are you eking out as a profit?
Okay, so firstly, the capital that is used to lend out is not the capital from the company or the investors into our company, but that capital is actually from the lenders, i.e., retail people out there, anyone like our friends out there who are looking to invest a capital into something. Let's say if instead of putting their money in the banks, they want to earn higher return. So instead of buying stocks,
yes, I understand that's the P2P. So this is where you're giving them a return of 20% on average, right?
No, we are giving them 12% fixed interest rates. And then we are charging the borrowers 20 to 25%. So the net interest will be 8 to 13%. And then credit cost after, so as I say, after 5 years, it can be managed as low as 2 to 3%. So credit cost, so the profit earned after accounting for credit cost would be 6 to 11%. And that hasn't exclude the operating expenses that we have to pay for. So that is just a profit earned after you take into account the credit cost, or normally people say profit after credit cost or provision.
Okay, thank you.
And then the capital that we receive from our investor into our company will be used to pay to develop the platform and to pay for daily operating expenses. Yeah.
Thank you.
Okay, thank you, Team 11. Thank you, Hannah.
Yeah.
Moving on to the next team. Please share your slides when you're ready. Hannah, can you stop sharing your screen, please?
Fang, can we start?
Yes.
Good evening, judges. We are FinCrew, a proud Malaysian company with big dreams and goals of being the game changer in the fintech industry, where we aim to help our customers play, learn, and invest. So what is the current situation out there? As you can see, investors are ready to take risks and go into business ventures, but they don't know where to start. This is where we come in. Let me show you what we've discovered in our research. So why gamification as a strategy? Let me define gamification first. It is the application of typical game-playing methodologies to other activities. In our case, we are gamifying investment. Why? As you can see here, 6 out of 10 millennials are keen on gamification and want to learn about investment. We see this as a huge potential, as we likewise want to build long-term relationships by engaging young ones who are League of Legends gamers to old-timers who started out with Atari and Nintendo. COVID-19 has expedited the digitization process in Malaysia, and we have seen a movement from traditional channels to using easy-to-access apps on their phones. So we definitely believe that this is the best time to enter the market. To talk more about our target market, here's Johan.
The beachhead of our market is Malaysia. As of 2019, there are 823 billion of assets under management in Malaysia, making us the top market in the region, out of which only 0.5% are invested via robo-advisory platforms. This translates to 348,000 users today, but is projected to grow 28% year on year up till 2024. We'd like to present to you next a short demo. It's a fully digital, non-face-to-face KYC. Fill in the basic particulars, take a photo of your My Card, and complete a basic financial assessment. And we are ready to go. Click the icon to set your financial goals, whether it's a vehicle, vacation, and fund it the way that you would like to. For example, you can fund it using e-wallet or your online banking account. Next, you can also monitor your investment growth day to day or week by week. We have also educational programs, investment simulation, and games. You really like our product, why not invite your friends or family to join our platform, discuss our investment goals, and play simulation games and get rewarded. My Money Tree is a wealth management robo-advisory app that has ease of onboarding KYC, goal setting, strong visualization, learn while you play games, be rewarded, a social investment platform. And we want to help our customers to learn, manage their wealth in a fun and rewarding way. Moving on, I'd like to hand over to Mei Yu talk you through the competitive landscape and our revenue model.
Thanks, Johan. Hope the demo gets everyone a little bit perked up. When we look at the competitive landscape in Malaysia today, there are 5 robo-advisors in the market right now, none of whom offer gamification experience at this moment. As we pointed out earlier, there is 0.5% of robo-advisory users, projected growth of 28% year on year, lots of space to add another player to ride this wave of growth. Rise is famous for its micro-investing, Stash Away for its user-friendly experience, and us, FinCrew, will be known for the gamifying investing experience. As a start, we propose to charge a competitive price where investors can invest as low as 50 ringgit to test out our platform. Once they got hooked, we can earn another source of revenue from in-app advertising. Our partners will be Crack Invest, an offshore end-to-end wealth management platform. They want to gamify their platform. We want to engage and educate the Malaysian investing users. Lots of synergy in terms of resource, knowledge, and cost sharing. We will launch our product within 6 months after we get the necessary funding and licensing. After that, we will work to expand further by working with local e-wallets such as iPay88, other gamification platforms such as Tencent, so that we can really be the next Atari and Nintendo in the wealth management space. Once we get traction, in 15 to 18 months, we will expand our outreach to neighboring countries such as Thailand and Philippines next. To conclude, we see lots of opportunity of growth in the robo-advisory. With gamification as an added value service, we FinCrew believe that we can be the next game changer in the wealth management space, with all pun intended. What are we waiting for? Let's play, learn, and invest today. Thank you.
With time to spare, questions, judges?
Sorry, can you go back to your business model, revenue model? Sorry, so you are earning a 0.7% on the first year. Is that what it is? Can you please explain a little bit on your revenue model in terms of how you are going to make money?
Hi, this is Alvin here. So I think in terms of the investment tiering, we've had a scan of the local environment. We've compared against the previous pages, the likes of Stash Away, some of our judges on the mentor side on MyTeo. And I think we have a pretty qualitative grip in terms of the number of percentage of fees that we think are competitive vis-a-vis the landscape. So if you look at it's like 0.7% versus 0.8% with Stash Away. I think where we differentiate on this particular page is that we think that we can still go lower. A lot of them have invest with just 100 ringgit, but we think we would like to go even deeper roots as we look at the previous statistics about people's bundling income for the age of 2024, which I think will be great drivers of growth who will be new to investment. And these are first-time investors who are digitally savvy and for lots of reasons have not invested before that we think really hit home for them. But we want to really start out small on 50 ringgit.
And what would be the return to the investors? What are those rates like?
Well, I think in terms of the return on the investment, for us, we think it's a long-term game. We believe in the vision and the potential as earmarked by a lot of statistics and research we've done so far. It has not progressed as far as having 10 or even the retail banks doing a lot on the wealth management. So we see there's a lot of potential to disrupt, especially on Malaysia itself. And that's where we think the opportunity is ripe for us to partner with Cred, who actually was also a startup like us. They're based in Israel, have a B2B wealth management platform. And we want to be the partners to actually penetrate into this particular geography.
I also like to add on a flavor. This is Johan here. On in terms of why we choose Malaysia, as we've seen that we have a already very large AUM in the region. And also we see that in the term of demographic as well, the people here have the money, investable income, to say, assess of whatever they need for day-to-day life, and that is somewhere they want to start. And in terms of penetration rate of robo-advisory in Malaysia, research found that it's already about only 0.5%. So we can see a lot of growth here coupled with the demographic that we have identified and the behavior. So we aim to be very customer-centric in terms of our value proposition.
Sorry, so are you saying from a tech perspective, you're just going to partner up with a platform rather than building tech from yourself?
So this will be a white label services, because bear in mind that for us, we are looking at starting somewhere whereby we can engage the customer closer. So we will partner with a white label platform, and this is also quite popular, I think, in Europe, especially. You have a few banks as well partnering white label. Even in Singapore, UOB is partnering white label of their wealth management product. So we also envision to follow the same path as well, white label, which provide us with more better competitive costs, as well as larger access to overseas market in the investable assets overseas. So it will provide us with this sort of products, and also sophistication and cost sharing in managing the investments for our customers.
Okay, how are you going to market this product to your target segment? And I'm actually assuming your target segment are gamers, yeah?
Yeah. So similar to the other team earlier, so our plan is to do below the line advertising. So that's a strategy that we initially want to undertake. So more on, email campaigns, going to trade shows, using social media as a platform in order to market this.
Hello, hi, Zehan here. Interesting that you brought up robo-advisory. Which part of this whole thing is robo, by the way?
Okay, so the definition of robo-advisory, look at it, is in terms of allocation of assets based on the risk that customer provided, their profile, and also we look at investment in terms of mainly goal-based investment. So the assets were allocated via the risk profile. And yes, there will be algorithm for us. Basically, look at ETFs, which is used by 89% of the robo-advisory as a passive investment tool. So also based on research, it says that active investment do not necessarily beat the market. So looking at ETF itself, a passive investment, and also as explained in our earlier demographic, that these customers do not have time and they want to involve in investment without having to learn a lot. And robo-advisory is the perfect tool which provide a passive investment. So we would like to also keep it to work with our partners to ensure there's a balanced portfolio and keep this as a passive investment vehicle for our customers.
So can I categorize that you will only be a channel partner rather than a technology provider?
Yes, in that sense, yes, we are front end from the licensing perspective. We are front with regulators. We manage all the reportings. We will also do all the marketing of the products, build the front end customer engagement platform, provide the customer service. So to the customer, we are the robot advisory. If you look at credit cards, the same as well. It's Visa, MasterCard, but it's also sort of a white label when banks actually write on a Visa, MasterCard platform to push their credit card products. So in that sense, I would say we are looking at such direction.
Thank you.
Okay. Okay, thank you for that question, Zihan. Moving on to Team 4, if you can unshare that screen. Team 4, you're up. Very good. Ready and go. Team 4, you might want to unmute yourself.
Sorry. Okay. Yeah. Good evening, judges. Good evening, everyone. So my name is Kenny, and we are Team 4. First, I would like to thank you for taking your time to be with us. Okay. In the current climate, we as users are experiencing tons of products in the market. The same goes with financial products. With existing financial products from traditional financial institutions, coupled with various digital and e-wallet products, it will only keep increasing. So it will become an emotional burden for us to maintain and manage multiple bank accounts. The challenge is amplified when it happens in a region where financial literacy is poor. As S&P Global Survey puts it, Southeast Asia is among the regions in the world with the worst financial literacy. Have you ever thought of having all your financial products with different banks and institutions under one app without the need to enter into multiple apps and websites to perform actions? This is what Guru is all about. Guru wants to become a one-stop financial applications to streamline all users' finances on one platform, provide a virtual assistant to guide and educate users along the way. The three main features in Guru, there's three main features in Guru. First, it analyzes users' past spending behavior, monitor current transactions, and predict the future financial conditions. This is to help and assist users to understand their current financial situations and make sound financial planning. The second feature is the ease of executing transactions and events. Guru's main call to action is the chatbot. By just typing what the user wants to execute, the chatbot will pick up keywords and execute accordingly. It's like chatting with your own personal assistant or relationship manager. Thirdly, is with all the transaction data that we are able to access, we are able to understand and generate a consolidated statement for users to have a glance of their current financial status. Thus, Guru is also able to provide credit score based on users' transaction activities and repayment timeliness. You see Guru as a connector between the users and the financial institutions. Hence, they are our two main stakeholders which we focus on bringing values and benefits to. Benefits that we bring to our users is the seamlessness where all the solutions are available at one place. A personal assistant to assist, guide, and provide financial advice. On top of that, products that suit the users will be recommended. So no more wrong type of credit cards. The add-on values that Guru is able to bring to the banks and e-wallet is by providing a better marketing value and also an effective communication channel to their users. Guru also able to provide market analytical insights to them. Right, next, I will pass over to Tim to explain more on the revenue models and the target market.
Yeah, thanks, Kenny. Thanks, everyone. For Guru, we are looking into SEA markets, particularly in those four countries: Philippines, Thailand, Indonesia, and Malaysia. Due to the fact that there is a comparatively low financial literacy in those four countries, but in the same time, there is a higher internet penetration rate than the other SEA countries. We are expecting internet penetration rate of those four countries around 10% to 12% in 2025, which indicates the opportunity that we are looking into or the market outreach is constantly growing together with internet penetration rate. Next slide. Of course, we acknowledge there are similar competitors in the market, but what Guru see or what we see is a gap or the opportunity that we can serve rather than the competitors. Guru is providing not only AI-powered financial management decision, but also a control to perform transactions from different bank accounts or different e-wallets with a very convenient chatbot functions. Next, please. And we are looking into two different revenue models. The first one is user subscription. We are looking at the 71% of our target market, which is equivalent to 34 million of users, has access to internet. By acquiring 5% of that market in 3 to 5 years of time, with annual revenue from user as a dollar, we are looking into 17 million of annual revenue. And also we are providing customized solution out to our payment providers, as in terms of selling upselling of their product or insightful analytical report. Those will be charged according to the size of the project. And as saying, this is from Team 4, and thank you everyone. And the floor is open to question and answer. Thanks.
Plenty of time for questions. Judges?
Thanks, Team 4. Got a question on chatbots because they're great in theory, but they can be awful in experience. What's so special about your chatbot? Like what type of technology and how are you ensuring the quality of it?
Hi, sorry, this is Jessie here. So basically what we want to highlight on the chatbot is whatever that is presented in the solution, like if they want to access to their financial analysis, their dashboard, and also all of their transaction, they can all instruct to the chatbot and chatbot will action for them. Of course, there is still an area of improvement for the chatbot. And I think as time goes by, we can source for a better solution and enhance the infrastructure. Yeah.
Thanks.
Can I have a deeper understanding of your business model and how are you planning to roll out your go-to-market in terms of reaching and adoption?
Okay, if we can, so there's 4 markets that we are targeting. The first to go to will be in Malaysia, because Malaysia, comparatively, there's lower financial literacy. But at the same time, we know that the community is started to have adoption on online banking or e-wallet. And with the expected internet penetration, there is a very good market for us to join in. Then on the revenue piece, basically our key revenue stream is on the user subscription fee, because we just have a very basic assumption, like if let's say we charge $1 per annum for each user, then easily if we get to acquire 5% of the total market population across these 4 countries, we can have a revenue stream of 17 million. So apart from that, we also wish to highlight that apart from just taking a user subscription, we have other revenue stream as well, like a commission-based advertising, analytical report. These will be charged on our partner, which is the financial institution or e-wallet. If I can elaborate further on the commission base, we just wish to highlight that when the partner is on board with our platform, right, we will acquire their product information. So through our database, like by analyzing the user data, spending behaviors, we can recommend what is the best product for them. So if let's say, for example, this user particular spending a lot of travel, then we can recommend a credit card that they can most beneficial for their travel expenses. So when we get to sell that product, right, then we can charge our our partner, a commission base, because anyway, financial institutions are already spending marketing expense to market their product. So with this platform, we actually help them to target a right market with more accuracy and deliver a better value for them.
Hi, I just have a question to add on to that. So say, for example, if I'm from an e-wallet partner, what benefits do I get out of it? I can clearly see what the benefits coming from a financial institution, but from an e-wallet perspective, what sort of benefits do I get if I become your partner?
Okay, I believe e-wallet, other than just solely on focusing on e-wallet, right? I believe they are also looking to explore for others market opportunity. So that's where analytical report comes in, because we hold a lot of user data across different demographics and also country. So we can analyze as a population as a whole, what are their pattern of spending like, and where is the trend moving? So we can provide this insightful report to our partner in order for them to start developing the product that will be benefit for them. for their future business opportunities as well.
So are you saying you're going to share data of the other pillars that you have with your partners?
So when we saying sharing data, it's not about a user specific data. It's all anonymous. It's kind of like a survey they conducted through this platform, the data we collected, and of course we will get a consent from the user itself if they want to participate in this research.
Okay, thank you.
Any last questions?
I'm good, thank you.
Okay, thank you very much, Team 4. Moving on, you can unshare your screen, please.
Okay, thank you.
Very good. Moving on. Next team. We got LendyMax. Right, off you go.
LendyMax here for you, with you, providing alternative financing to Indonesian SMEs. Indonesia is our region's largest economy, averaging 5% annual GDP growth. With high mobile phone and internet penetration, a growing demand from borrowers and lenders, the infrastructure is there for innovations to boost SME finance. SMEs form the backbone of Indonesia's economy and employment, but 74% do not have access to funding. Amplifying the country's SME financial inclusion challenge, there are almost 49 million underbanked SMEs that struggle to get loans from banks, according to Indonesia FinTech Association. They face high barriers for timely funding and cost optimization. Most are family-run, lack digital presence, confined to their locale, made worse with COVID. Lack awareness in industry trends, knowledge gaps in available tools, government aids and fundings. We give SMEs fast, easy, transparent solutions that's automated and digitalized, enabling access to wider markets through our partnerships with global partners. We enable SMEs through fund education. Utilizing debt funding, we directly connect investors and SMEs. LendyMax does credit risk scoring to pre-qualify borrowers. Selected SMEs set out their funding account amounts, repayment terms via bond issue. Investors pre-select their investment risk criteria. When match is found, they can view the digital bond contract, accept and transfer their funds to LendyMax held in trust. Funds are released to bond issuers when at least 80% bond funding needs are met at the end of the subscription period. With LendyMax, investors have alternative investment on an easy search aggregated platform where we do the first level filtering, contract issuing, repayment follow-ups. SMEs have 24/7 direct connection to investors without hustling for financing needs, gain access to wider markets via digitalization on a single platform. Our partnerships with Business Sans Borders platform and Circle Global Digital Payments give SMEs a one-stop, direct access to global markets onto a borderless business engagement. We make learning fun and engaging. Partnering with academics, institutions, and others, SMEs are incentivized with better credit risk score when they level up their financial literacy, industry trends, get government funding on LendyMax. Now a short video.
Thank you, Samuel. Moving on, talking about our go-to-market strategy. I mean, I think we have a three-pronged strategy that we are working on. The first one would be working with industry association and our partners to build awareness and make the sort of SMEs aware of the sort of opportunity available here to leverage on this platform and borrow money at a much reasonable rate and at a much efficient manner. We intend to work with digital media. There are multiple platforms that we are working with, and also use freelancers to promote freelancers and influencers to promote our platform. In addition, we'll be doing market validations in the initial few months and be getting the feedback to enhance the product further. From moving on to the financials, I mean, I think this is the kind of roadmap that we're looking at. We believe that it's a huge market. Despite the fact there are incumbents in the market, there's an opportunity for us as new entrants to go in and capture the market share, given the sort of product features that we have. So you see that we have not had a very sort of aggressive sort of market share that we're talking about. We are gradually building it up as we go along. And in terms, the revenue builds up from there. The three focus areas where we are looking at investing as we go on continues to be our platform, which is our key driver. And the second one is looking at legal and compliance costs to ensure that we are compliant with the regulations at any given point of time. The third one is looking at advertising and promotion, which is primarily a driver to ensure that the platform is well advertised and people are aware of this. At the same time, educate the investors as well as the borrowers. And we intend to be profitable, given our conservative estimate. We still estimate to be profitable in year 4 onwards. So we are here as lending our hand to the SME and maximize their growth. So we are here to support the SMEs in their journey. And this is our management team, which is going to look after all the investors and the borrowers. So from LendiMax, we are here with you. We are for you, with you. Thank you very much.
Very good. Right on time. Judges, questions?
I've got 2 questions. Danny here. First one, in Indonesia, how do you do your credit rating? Okay, what are the source and what's your thinking about that? That is what you plan to do, and how are you different from the other lenders, whether it's a bank lender or non-bank lender? Second question, where is, I may have missed that, what's your source of funds?
So from a funding model point of view, we are debt funding. So we are actually not taking, so we are more like the investment banks. We are facilitating the whole process. So we are connecting the investors and the borrowers.
Okay.
And to answer your other question in terms of the risk scoring model, that's basically the black box for which we are being paid. And the sources are coming from industry associations, looking at SME associations that have information on the sort of borrowers who are there. So there are multiple factors that we are looking at. From an industry risk point of view, which industry is the borrower operating in? We would also look at basically the financials and the competitive position of the sort of borrower. What we are also looking at here is the borrower has an history. So we can also look at sort of any sort of default issues that the borrower has in the past. And that is where we are accessing a couple of databases as shown in the slide through APIs.
Yeah, but you specifically mentioned about Indonesia earlier on, and I'm not aware of any credit rating agencies in Indonesia.
Just to answer that point, sorry, let me answer that.
Sure.
Based on, we understand that there's this BIK, which is the PT Credit Bureau Indonesia, a government one, including a private credit bureau called Skoku, which is under, which is under a private company. So these are the kind of credit bureau providers that we can work on to get a credit history.
Add on that, the credit bureau, the Indonesia, it is licensed by the Indonesia Monetary Authority, OJEK.
Okay, and what are your anticipated default rates, and how are you looking at putting that into your costs?
So, I mean, I think if you look at the model, I mean, we are not taking on the risk onto our balance sheet at all. So what we bring in value for the borrowers is basically access to the finances. And what we provide to the investor is basically a transparent credit scoring model, which basically provides them saying that, are you going for an investment grade bond? Are you going for a speculative grade bond? So they would understand the risk profile of the bonds that they're investing into, and they are taking on the risk. That is primarily why we are providing them with higher returns, depending on where they invest.
Any other questions?
Yeah, quick one on this. What are the other competitors in the market running debt funding in Indonesia, and what is your competitive advantage against them?
All right, let me answer that question. Samuel here. So there are quite a few players in the market right now, such as CoinWorks, Investry, As far as we know, Investry is more into consumer lending. CoinWorks is also into business lending. So fundamentally, our business model is the same. The difference is that we do it via a legally binding bond contract between the investors and the bond issuers. The other USP is what we mentioned here, digitalization. With via LendingMax, the SMEs have direct access to global markets beyond their own locale, with our partners such as Business Sans Border, which is a project under MES and IMDA, and also Circle Digital Payment, which recently has also partnered with Visa to provide a global access to Visa merchants. That is USP number one. Of course, the other one is gamification. On a single unified platform, the SMEs are able to access various financial literacy providers such as universities or any other providers, or even including banks themselves, instead of going through to multiple avenues just to search for what they need and what they want. I hope that answers your question, Calvin.
Yep, thank you.
Yep, thank you.
Brilliant. Thank you, LendingMax.
Thank you, guys. Thank you very much.
Thank you. Thank you all.
Okay, let me share.
Now, if you can stop sharing, brilliant. Federate, you're up next. And if you can put that onto presentation mode, please. Brilliant. Your time starts now.
Hi, everyone. This is Federate. We are presenting to you our proprietary federated learning model that provides alternative scoring metrics for licensed digital banks and P2P lenders. So over to Gekhan, who is going to present on our problem statement.
Hi, Gekhan here. So basically, what we the SMEs are the lifeblood of our economy. So what we see during COVID-19 is that a lot of SMEs, they face the difficulty in securing loans during this period. And in particular, we focus on the micro SMEs because these are the companies that need the loans the most but are not able to get it either at all or fast enough. So if we, moving on to the trends in the loan space, if we look at it broadly, we see that the traditional way of assessing creditworthiness is heavily biased towards financial data. However, this trend is slowly moving towards alternative kinds of data like mobile and utility usage, as well as social media and mobile app interactions. So if you follow me on to the next slide, in terms of the visibility of this data, we can grade them on 2 dimensions. One is on availability and one is predictive power. So on the lower left corner, you can see things like psychometric data, which are relatively easy to obtain through psychometric questionnaires, but they have low predictive power because people can game the questions. So as you can expect, if we want to obtain data with higher predictive power, this type of data also gets more difficult to obtain. So Simon will share our solution to this problem.
Okay, so our solution is a platform that offers credit scoring based on alternative data. The scoring generated via this platform can be used to assist bank and money lenders to make their decision on loan approval. Technologies such as OCR, RPA for the process and document automation is part of the platform features, but more importantly, we'll be using a technology called federated learning to ensure data security. So by applying federated learning, other than the data privacy, it also allows fast turnaround, continuous monitoring, as well as scalability. Once federated learning model has been trained, this model can be easily reapplied in other regions with some minor tweaks on the machine learning model. So the next slide shows us, this is an illustration of our vision. Having launched conventional data providers connected up into our platform with their own machine learning model, and our federated learning model can learn via the machine learning model's features without actually touching the raw data. So the way we see our business model is we will charge a service fees for each successful application to money lenders and bank. And on the other side, we will pay our data provider fees for every single successful loan application. So moving on. Yeah, so I think we have covered this one. Yeah, so we have covered this one. So over to you.
All right, so I will be talking about the target beneficiaries and our target market. Okay, as a start, we will tackle on the food and beverage industry. That is the most highly difficult, having highly difficult access to financing and even micro loans. So like especially the hawkers and restaurant operators, they are the ones that can't access to loans easily. And so based on current situation, the pandemic, we will also extend our solution to the travel industry, especially those tour operators and travel agents that are having difficulty access to loans. So next, we will talk about our expansion roadmap. So in the first year, we will focus on developing the platform model and acquire as much data partners as possible and forming the team. And in terms of footprint, we will start with our base in Hong Kong and subsequently expand our solutions into the Southeast Asian market, starting from Singapore, which have a more developed regulatory framework and also the social credit scoring security and regulatory technologies. Then moving forward, we also expand our solutions to Malaysia and rest of Southeast Asia. Meanwhile, we will also closely work with the regulators in terms of the framework monitoring.
Okay, just wrap up.
Okay, so here are the partners that we will work with, like Grab, who are also launching their third-party consumer loan, and this is a good opportunity for us to work with.
Very quickly, the next slide, please.
Okay. So this is the end of our presentation. Thank you, everyone. And now I'll open the floor to Q&As.
Can you go back to the FedR score slide? I still don't understand exactly how the crux of this product works in terms of the ecosystem one, where you're talking about yes, this. So you're saying you don't have access to raw data, but you'll rely on the machine learning of the various partners. How can you guarantee the accuracy of your FedR score without access to the raw data or metadata?
Okay, so I guess this is where the technologies actually comes in. I don't think we will able to guarantee the accuracy, but the beauty of the federated learning is by combining multiple machine learning models together to come up with a model that is trying to predict the result. So I think you are correctly saying that without the raw data, it will take a more I would say more data partner to provide the machine learning model to ensure we can get to a certain accuracy. But this takes time and it takes iteration of training the federated model.
Yeah, adding on to that, to that same question is basically how are you going to convince banks who are traditionally used to the traditional credit rating models, solvency of companies, solvency of directors, etc., to your new set of non-conventional data sources?
So okay, so this alternative data model is providing I would say something more than the existing conventional. I think for banks, they probably will look at both data sets, the conventional and the alternative. So hopefully the alternative can provide something meaningful to the banks so that the loan application can, so they can make their decision based on that. But for money lenders, or what I say, the micro loans lenders, alternative model is something quite useful for them, because majority of the SME, which they cannot go to a bank, because of the conventional data isn't looking good, so they may need to seek alternative, and this could be a solution.
Can you talk also about your data partnership model, like how you're getting the non-conventional data sources to collaborate? Are you buying their data, or do you have a partnership in place?
We will seek different kind of partnership. So first, we will identify what kind of industry we would like to penetrate. So let's say we have chosen F&B because this is something which hit the economy pretty badly. So for Hong Kong, we have chosen OpenRise, and this is exactly what they are doing right now. They are actually partnering with company based on the use of their data. So so that's what we are trying to do, set up different, we will develop and basically go and sell our system to different partner. And in return, for every single successful loan application, we will pay our data provider a fees. So we work on a share, an ecosystem perspective.
What do you intend to charge the fintech people who are going to come and use your system?
So for the banks or micro lenders, we will charge percentage, depending on the loan size. We think will be between 1% to 5%. So taking an example, if we are talking about a $30,000 US loans, if we get around 500 cases per year, so that is about 15 million US with 3% service charge. That's represent 450K in US dollars for us.
Okay, quick question. How are you going to validate the efficacy of your models? Even if you have access to all the data, so never mind the difficulty in getting access, assuming you have access to all the data, how do you validate the efficacy of the model and sell it to the banks?
Okay, so we will be working with some close data partner provider. We will do different trial run. And also we will be working with R&D center in Hong Kong, which they are looking into this alternative credit scoring and federated learning model as well. So we will partner them together to work on, to validate, because they have some data provider which already into partnership with them.
Okay, thank you very much, Federate.
Thank you.
Thank you.
If you can stop sharing your slides, please.
Okay, so and also we would like to highlight that one of our team member could not make it tonight due to work commitment. Rahul, he couldn't make it.
Okay, thank you for clarifying that. Thank you.
Thank you.
Team 1.
Hi, I will share my screen right now. Hello, everyone. Jenna and fellow judges. Oh, sorry, this is not. Yeah, we didn't really put up good work here, but then we will try anyway. So sorry. This evening we want to present an idea of a cross-border payment remittance solution for the unbanked population. So why unbanked population? So I think we are motivated by the fact that there are a lot of foreign workers in Malaysia that actually remit money back home to countries like their home countries like Bangladesh, Nepal, or Philippines. Okay, but a lot of them they are unbanked in their home countries, and currently they are using to send back money to their home countries. They are using traditional remittance service, which currently impose high charges, and they are not a seamless solution. So we are asking ourselves, can we actually provide a seamless cross-border payment or remittance solution that actually supports this unbanked population in these developing countries? So we think e-wallet is part of the solution. So why e-wallet? Although a lot of them, they are unbanked, but we have seen that it is common sight among these unbanked people. So Bangladesh itself has already seen the number of e-wallet users jump from 3% of the country to 21% from 2014 to the last year. And not to mention that e-wallet is very convenient. The users themselves, they do not have to visit any ATM or any outlets to obtain the cash. So the solution to the problem that we mentioned just now is actually a e-wallet alliance for seamless cross-border transfer. So this model, what we want to do is to enable remittance as an integrated function within the e-wallet apps. For example, if you look at the picture there, so let's say I'm a GrabPay user and I want to remit back. I want to remit back to Bangladesh or to another user in Bangladesh. What I do is I open a Grab app, Grab app, and then there's a function remittance where I click on it. Then I can choose to remit the money to a desired e-wallet of other country. Okay, so what we wanted is to offer a competitive exchange rate or competitive exchange rate by actually connecting all these major e-wallets directly. So to do away with the middleman. So these operators in the network, they will actually perform fund settlement amongst themselves. And yeah, so this is the whole idea. And then the possible feature that we want to add in the future is actually to even extend the service beyond online channel. For example, if you see on the right side, some user, if they don't want to send to e-wallet, they can they can send to same the e-wallet, but then they can choose to collect the cash in some outlets that is partnering with the e-wallet operator. Yeah, that's all that we have actually.
Okay, ahead of time. Judges, questions?
So what rails do you run this cross-border transfer on? And I'm assuming you make money on the back of the FX.
Sorry, you mentioned what rail?
What rails do you do the transfer on? So how do you do the transfer across? Are you setting up your own rails? Are you riding on existing rails? I'm assuming you take a cut of the FX and then pay whoever the rail provider is on the back of this.
That's what we actually think this will belong to our network. So we take a cut from the every transaction. We take a cut from the transfer.
You take a cut, so you take a percentage of the transfer.
Yep.
And you're building connectivity between wallet and wallet across the different countries.
Yep.
How will you manage your compliance?
We didn't actually thought of that. We thought, e-wallet themselves, they are licensed to do remittance, isn't it?
Not all.
Okay, then there's one period that we have to think of actually.
Okay, thank you.
So your entire thing is you are going to build some kind of connectivity between the wallets. The wallets transfer money, you take a cut of that transfer. The FX side of things, I'm assuming you are going to be the one converting the FX, or you're going to have some kind of a FX converter in between. So when you move ringgit to Bangladesh, right? Who's going to do that conversion for you?
So the idea was we set up a net off system between the two e-wallet partners, whereby they will settle at the end of the day, and the FX settlement could be with a partner. Yeah.
Okay, so go ahead.
Sorry, Kevin. Okay, how do you compete with the established player? This is, to me, what we call B2B in the remittance space, right? How do you compete with the established B2B players like Trianglo and all? I mean, they've been around for 10, 15 years already.
When we first thought of this idea is that we were looking at the e-wallet market and thinking that a user could actually place a lot of his cash in very fragmented areas, right? For specific purposes, remittance, etc., remittance and bill payments, etc., etc. Our rationale is that we want to have an integrated remittance function among the big e-wallet players. For example, in Malaysia, you will have Pulse and Touch and Go Digital, so that you, as a user, you don't have to break up your cash into several buckets to go in to be placed into several wallets. So the selling point that we're trying to aim for is that this solution will be integrated into the main e-wallets. Like for example, in Bangladesh is Bcash, Nepal is e-Sewa. Yeah.
Okay, thank you.
Okay, thank you, Team 1. You can stop sharing your screen, please. We're moving on to the next team, the Sehat gang.
All right, do I start?
Might want to share your screen, the slides first.
Sorry, I was on mute just now. I am trying to do this, but it's not working at the moment. Just bear with me. For some reasons, it's not working. Right. Please tell me if you're seeing anything.
No.
No, not at the moment. Can you try again, please, Aida?
Are you now seeing anything?
No.
I've clicked on share screen and
If you are okay, hold on.
Okay,
here we go.
Yeah.
Yep.
Just
okay.
Are you seeing anything now?
Yes.
Yeah.
Okay.
Just,
So all right.
Just start the stream.
All right, great. Hi guys. This is a chance for us to combine all the things that we have learned, the information we have picked up, as well as to share the experience that we have from the instructors over the past 1 month. Our pitch focuses on healthcare. I've heard all your presentations is talking about how to make money, how to save money, how to make more money. But if you don't have your health, you cannot really do anything with your money. So we'll demonstrate that in our presentation right now. Next slide. Okay, the Great Divide, we have looked at how healthcare services in Malaysia has a disproportionate effect on the aged, the lower income groups, as well as the rural communities. Healthcare is essentially two segments, the rich who can afford the facilities, the poor who are quite wretched actually. But we are going to address only one segment, which is kidney disease, and that affects about 90% of Malaysia's population. That's a very high number. Healthcare expenditure also ballooned 94% from over 500 million in 2010 to 1.1 billion in 2016. So what do we call our project? We call it Sehat because it represents sustainable economic health management by the application of technology. The next slide. We have identified the challenges in the healthcare delivery system. So you're going to ask, so what? So we have looked at how this affect the four key sectors of healthcare, which is the funding, patients, merchants, and technology. And how do we address each of their concerns? For funding itself, we are going to tokenize the healthcare assets into collateralized bonds, so that this will give funding for new classes of machines and create opportunities for new funding and donors. For the patients, essentially, we want to give them as minimal cost as possible, so that it will be a very low participation fee. The bulk of the revenue will come from merchants and participating companies, where they will pay participation fees, as well as access to data or interactions with the vault. And finally, the technology is a part where we believe is going to give us the greatest value to drive efficiency and efficacy. We believe that a hybrid of private and public blockchain utilizing smart e-health contracts would help to integrate our services together. And also the fact that the Sehat Vault stores a lot of the patient data. Now, this is a concern of everybody, for the regulators, for practitioners, and so on. And we anticipate that all these will be stored within the national healthcare institutions, where we will deploy eKYC and RegTech for risk mitigation and compliance purposes. Naturally, to make this as seamless as possible, we envisage the technology will be platform agnostic. The next slide. So what's the solution? You look at this, how does the SeHat platform benefit users? Number one, we are going to look at scalability. Right now, we are targeting only dialysis machine for kidney patients. We envisage that new health services could be deployed, and it could be also deployed based on geography, outside of Plain Valley into the more remote rural areas, for example. We also believe that this is a very important part of our social compact. Yesterday, we learned about ESG, and this is where organizations can fund their CSR activities in a manner which is transparent, which is accountable, which is reliable and robust. And their CSR activities helps to fulfill their social compact for the organization, for their employees, as well as for the community. And finally, we look at how all this can be a symbiosis. When I look at symbiosis, I look at things on how we can all tie this together as a seamless, workable function. And this is where the opportunity for financial institutions to come in and partner to offer financial products to customers at the atomic pricing level, because they know all the details about the customers. If a patient needs to need only dialysis treatment, he need not pay for the whole full package of insurance coverage that covers other illnesses and diseases. When you have insights into the granularity of demand analysis, that means you can accurately estimate what are the needs of patients based on different geographies, different age groups, and different profiles, and then price insurance premiums to the atomic scale. Somebody may pay $1.50, somebody may pay $2 because they happen to live further or nearer to a facility. And the symbiosis of data and technology also allows complementary services to be developed and expanded over time based on demand, supply, funding, and location. So where do we go from here? If you look at the next slide.
Please wrap up, Thomas.
Yeah. We look at the next 3 years, where are the areas that we are going, and then we also, the next slide, what's next? Patients.
Can you move on? Yep.
Open and fair access participation, singular economy for the health delivery system, and essentially I've covered all that. Thank you.
Right. I might kick this off. What's the FinTech solution side to this side of things?
Do you want me to take this? Yes. Do you want me to take this? Okay, so you have to look at the SeHat platform as a platform with regard to dealing with the access issues that is curtailing people to health assets. What we do is that we try the first use case, which is dialysis machine. If that works, it means that it can be rolled out to other things, MRI scans, Da Vinci robots, etc., etc. So where is the fin? The fin is the fin, or the financing part is in, for example, the funding. Like anything, like any ecosystem, you've got to start somewhere. And here is the funding of the assets. It is, as Thomas has said, the ROI is huge. Nobody wants to put in there because it's too high, it's too expensive. But what if you cluster the assets and then you tokenize it and you list it as a digital asset where it can be then broken down and then sold on exchanges. For example, the Fusang exchange, where you can e-bond it and then therefore create a secondary market. And that brings the capital fund in. With that capital fund, you can use that to then purchase it. Where does all this tokenization occurs? On the blockchain. So this is all going to be deployed on the blockchain. That's the financing part. The technology part is the deployment of the fragmentation that is currently, which all accesses we're facing. Technology exists, but they don't talk to each other. They're on separate platforms. And it requires, because they're not talking to each other, each of them are costed on a siloed basis. The Sehat platform is a private blockchain part that pulls all this together as a dApp. So if I could show you quickly the networking part, I can't do that, so sorry. Can everyone see this?
Yes.
Yes. Okay. This is where you can see. This is where the private blockchain is. Sorry. The private blockchain is, and that's the technology of it, where cryptography is involved, where the data server is then blockchain, which is black box, so it doesn't go on the public blockchain, and then the blockchain part is being used on the donor side. So hopefully that answers that.
Sorry, Ida, do you have a revenue projection model that you can share?
We have a revenue modeling, not exactly the, rather a business modeling.
How do you guys monetize for this?
Okay, this is where it gets very interesting. At the heart of all this thing is data. Data is the new fuel. Okay, bring you back to this diagram. Did you see the Sehat vault here? Okay, and the Sehat vault is basically the ones that stores all the encrypted data interactions every time it happens. So if, let's say, a patient gets access and uses the dialysis machine, it locks it. How he interacts it locks it. Who does he interact with? It locks it. And every time the vault just increases in value. This information is rich. This is what we are going to build. We're going to spend a lot of time building this, because once you build this part rich, other industries is going to come in, because for example, the merchants like insurance, banks, gyms, dietitians, and all this, they want this information. So what we're going to do is that we're going to enable the user, all right, because the encryption key is with them. Only they can encrypt it. They need their consent. Every time they ask for consent, the user monetizes it. So
Okay,
no longer,
right? How long do you foresee that you're going to take to build this very rich data set and be able to actually see revenue coming in?
Okay, that is basically the go-to market. So how we're going to do it, essentially, the first one is, because, as I said, we're going to start it with something small, a use case, dialysis machine, renal patients. So the first thing we're going to do is that we're going to go to the national registry that actually houses this. So we have the National Kidney Foundation, and we have the Malaysian Transplant Registry. So we're going to partner with them in order for them to actually give us that information. By using the information, we are able to curate and understand who needs what and who needs how many things, what are the assets that's been given. And based on that information, that's where we partner, and that's where we actually bring it to the requisite patients and say that, hey guys, we've got the machines ready. We've got the hospital who's willing to put it all in. Do you want to use all this thing for just $30, for example, subscription a month? And if they hop on that, that's where we say you have to be part of this policy framework, and you have to actually share your data. The data will be decrypted in the Sehat vault, but the encryption key will always be with you. Every time there is a request for it, you monetize it. So we're not actually passing the money like all the financing scheme is that they make money out of it. Here, what is disruptive is this, is that we put the power back to the people. We put the power back to the patients, and we make everyone who wants to use the data have to trade for it. So for example, again, a dialysis machine. A machine is just a machine. You need the consumables. So if, let's say, a pharmacist wants to use it, or an R&D company wants to use it, well, they have to barter trade. They have to give something back to use that information.
Okay, thank you, Team Sehat. If you can stop sharing the screen, Ida. Very good. Now, for the last team, we have the Magnificent Six.
All right, can everyone hear me and see my screen?
Yes.
Maybe let me move this away. Okay, cool. I am ready. Should I start now?
Yes, go for it.
All right. Hi, my name is Sen Long, and I'll be presenting on behalf of my team on our solution, Kaifa. Now, this is a true story of my friend. The names have been changed, however. Just like a famous TV show here in Malaysia called Kisah Benar, which translates to True Story. Now, let's meet Tony. He left his secured full-time job after 5 years to work on his tech startup. His venture needed to survive by applying for various government grants and financial aid, but failed every single time. On the other hand, his friend, Jay, who comes from a rich family, but managed to receive multiple grants for his different quote-unquote ventures. Tony also found that Jay brought his entire company to party in Langkawi right after he got the grant by scrolling through his Instagram feed. You might think that this rarely happens or only happened to my friend, but various articles that we found further proves this problem. I know what you're asking in Kelvin's famous words. Why should I care if I don't own a business or require any financial assistance? But we should all care because grants and government aid is from the taxpayers' money. It is my money, it is your money. Wouldn't you want your money to be given to deserving businesses? Now, we believe the root cause is because credit underwriting and KYC processes have not changed or improved in a really long time. Whereas currently, most people live their lives on social media and we can tell a lot more about a person through that compared to their credit scores or bank balances. So we ask ourselves, what if there's a way we can use technology and social media to reduce abuse of grant funding? Hence, we built Kaifa with the aim to ensure that only deserving businesses receive grants and financial aid while eliminating potential fund or grant abusers. What is Kaifa? Kaifa stands for Know Your Funding Abusers. Kaifa will use common patterns and attributes to spot and blacklist potential fund abusers. We do this by training our machine learning model with known abusers from various databases. We then scrape through publicly available information about the applicants, such as news, Glassdoor reviews, and even social media postings to build the machine learning model further. This information then feeds into a scorecard with different weightages, which indicates the likelihood of an applicant being a fund abuser. For example, we know that these people tend to show off that they've made it in life. So by analyzing this photo, we will flag this person as high risk. So the first implementation option for our customers will be a web dashboard where customers will be able to view relevant details of the scans, such as the risk level of an applicant and the various social media or websites that they've scanned. Alternatively, customers will also be able to integrate with our services through APIs where we complement existing KYC and underwriting processes. Our target markets will be banks, FIs, corporates, and government agencies, as these user groups would benefit the most from our services. Next, we plan to launch by first targeting Tier 2 customers within our target customer segment. Then, with our strategic partners, we will establish different win-win collaboration while marketing through them. As for our business model, we will be charging our customers different setup and subscription fees. One key point that I want to highlight is that we will waive certain fees for early adopters. As for our development roadmap, we aim to complete our prototype within 3 months and reach full adoption in month 13. Next, our plan is to expand horizontally and when it's time to take over the world. What does this world domination look like in the future? We plan to be a one-stop center connecting everyone within our ecosystem. We also plan to obtain alternate sources of revenue by selling various subscription services to future entrepreneurs and startups. Maybe we can even underwrite social media influencers with the data we obtain. Now, I believe that with our superstar team, this vision will be a reality. So now, back to my original story. At the end, Mr. Tony grinded for 3 more years and used up his entire savings. He's forced back to a 9-to-5 job, while those fund abusers like Jay closed their company after 6 months. Jay then joined a VC firm because of those perceived success that he portrayed. The ending could be very different for my friend Tony if grant providers used our services 5 years ago, because 1 cent saved from these abusers is 1 cent provided for deserving entrepreneurs. Thank you everyone for your time.
Okay. Questions?
Thank you for the presentation. Okay, what is your business model like in terms of who do you anticipate is your subscriber, and how do you intend to charge? One, two, how do you intend to obtain these information which you now need to authenticate and validate?
Okay, maybe I'll go to the business model first because we already have that slide. So we will be charging our customers differently. So we have a yearly subscription, we have a setup fee as well. And then from then on, we will charge per scan, right? So it depends whether you go through our API integration or you want to use the dashboard. You can even use both, right? So if you use our dashboard, we have a per user charge and per year. So that comes at 100 ringgit per year. As for how we plan to market, our idea is always to reach out to government agencies first that provides grant, because this is where I believe the data would sit and be relevant the most, because it's a common problem, right? There's a lot, the term grantropreneurs, right? So I know that the government is trying to actively solve this problem. So that will be our immediate target customer, or maybe we can establish partnerships. I couldn't remember the second question. Can you repeat that again?
In terms of where are you going to obtain your information and data source, and how do you intend to validate and verify the authenticity of this data and the usability?
Okay, so let me go to my slide. Yeah, so this one. So once we've managed to partner with these government agencies, what we will be able to do is then pull all their information on the grants that they've given and see whether these companies are still surviving. That's one way. So the more data we gathered and the more partnership we establish, that is when we can really iron out our machine learning model. Right, so from there we can teach it what is right, what is wrong in terms of the weightages that our model predicted.
Okay.
Hi, Zehan here. Most of the social media accounts and information could be kept private, right? If you opt to keep it private, then how will you then crawl this data?
Yeah. So that is where there's this small little caveat that we did, like what Facebook always tend to do. So whenever we need to access information, our idea is that all these customers that will want to use our services need to specifically specify that they will be looking through their social media feeds. Right. So I know that when we start, there are some people that don't open their information public in terms of their social media details. Their accounts are private. That is where we will crawl through Glassdoor reviews and even Laureate forum, because all these entrepreneurs and all these startups who raise funds and party away, you can definitely find news about them on news sites such as Glassdoor, where you will see their employees complaining about the company. They will say things like, "Oh, it's a great company to work at because there are a lot of parties." Right. So that may be one of the ways for us to find alternate data if we cannot access their social media. So it's not just social media, right?
Yeah, Kelvin here. So quick one. How do you intend to separate out what is actual abuse from what is segregation of personal funding and corporate funding? So for example, in this example of, I don't know his name, he may lead an ostentatious lifestyle on his own personal account, but doesn't touch the corporate account from a grant perspective. How are you able to filter that out from a risk perspective?
Okay. So what we are hoping for, we've not proven this yet, because if you look at our development plan, we plan to raise funds and then spend 3 months developing. But our hypothesis or our assumption is that our service will be more of as a complementary service rather than replacing, right? So once we are able to obtain all these social media details and the grant details, hopefully through CTOS checks and even their bank account details, we will be able to also weed out these instances where maybe it comes from his own money, maybe it comes from the company money, right? So by comparing when he received the grant versus what money was used and where they used the money, perhaps we can teach our machine learning model how to detect these type of things better.
So in reality, you need actual access to corporate account in order to be able to see this. Otherwise, you run the risk of mislabeling significant abusers, right?
Yes, that is correct. That is definitely correct. Yeah. So the more data that we have, of course, the better. That is, I think, how machine learning will slowly learn, and we train the model to be able to detect and to be able to detect more accurately. The more that we train it.
Any final questions? Okay, very good. Thank you, Sen Long.
No problem. Thank you very much.
And now over to Jenna. I think she'll be pushing the judges over to a breakout room.
Thank you, everyone. So you'll be waiting for the next 5 to 10 minutes. We will, so you can take a short break. So we'll come back in 5 minutes. So you can stay on and we'll be announcing the winners. Congratulations, everyone, for graduating. You deserve this small little break. So the judges will go into breakout room. Thank you. Hey guys, we're gonna start now. So we have the results.
Alright,
Are you ready?
Okay lah.
Are you sure? Okay.
You can't do that, right? Let's work from the bottom up.
Okay, so we're gonna have Carol to announce. Drum roll. We're gonna announce. So Carol, we're announcing the best team. Carol, who are we looking at? Best team.
We looked at a lot, okay? We looked at C-League, we looked at FinCrew, Lendamax. You guys all stood out, but we went with FinCrew. Congratulations.
Awesome, FinCrew. Congratulations.
Well
done. The judges will be tell you the reasons later, and we have the next one. If we could have the best pitch, Jasmine.
Oh, so fast,
Yes.
Guys, look, first let me congratulate you guys. Did stupendous work. I know I was a bitch of a judge, but that's the fun about being the judge. We get to be bitches, right? Yay. So drum roll, best pitch goes to Lendamax. We like
Yay.
and all that.
Thank
Good
you.
job.
Good job. Thank you.
Congrats, Lendamax. And can we have Zehan to announce the best fintech / techfin?
I think amongst the whole team, we decided on 3, right? So I think Lendamax came number 1.
Congrats!
And then FinCrew came in number 2. And Sehat came in number 3. So I think we decided these 3 are.
Not bad.
Love the question, Ida. We really love the question.
we were so by the returning the power back to the people and then the blockchain story lah. No, kind of like
Okay.
Well done, I get it.
No, and I'm a fan. I'm a real fan of the monetizing, allowing the individuals to monetize usage of their data. I think that's going to be the future. Coming soon.
Yeah, that's totally agree.
But I think maybe Ida, one word of advice, we really have to sit down and think how you are going to work on your business model.
Yeah.
If you want to make this work. Yeah.
Talk to me. I already know what the business model looks like.
Wow. So maybe I think I'm not sure whether Carol is still here, but Carol, could you maybe elaborate a little bit on why you chose the team?
Yeah, sure. It was a joint decision. It wasn't unilateral. Okay, we did have a discussion. I think when it comes to best team, we're looking at not only good representation across the whole team, both in terms of presentation and Q&A, but also the transition, as well as just how.
Sorry, Robin, mute yourself.
So well done.
Thanks, Carol.
Thank you.
So if we can get Jasmine to elaborate a little bit.
So we had to pick up best pitch between Danny and I, and Danny had to run off because it's actually his son's 18th birthday. So I'll apologize on his behalf and just let you know that we are dedicated to making sure that everybody gets fair hearing. And so the two of us actually agreed that Lendamax was best pitch in that we really liked the business model and the presentation, of course. And there were a few close ones which we also agreed. And just so that you guys get the affirmation, Seedlink, you were mentioned in our top 3. So was FinCrew. We also mentioned my FinSnap, Sehat, and of course Kaifa. So please keep up the great work. It's really close, and Lendamax, you did a great job, though I didn't get the bribe that you promised.
Congrats, Lendamax. Could we hear a little bit from maybe Zahan, Kelvin, Jermaine on the best fintech tech fit?
I think, yeah, we all actually, come to an agreement that we actually like LandyMax. And then we were kind of trying to decide between second place and third place, which was kind of difficult, but we deliberated and therefore came up with the results that, we think that FinCrew, it's top 2, and then Serhat is actually top 3. Serhat for us is really an amazing idea. About how Ida went on about how unjust the world is and things like that. So we really, really love her passion in terms of the idea and how it could actually give back to the community. As for FinCrew, yes, there are already a lot of investment applications is out there today in the market. But like having said that, we also sort of like deliberated, but you're a tech company without the tech. But that could also be a sort of a benefit in the long-term future, because that also means that you may be able to minimize on your OPEX, possibly. But I think maybe one thing that I want to highlight is that if you really want to work on this, you really need to look into your marketing game plan, because I think when I asked you some question earlier, I don't think you guys are very sure in terms of, how you want to market this product, because you are looking into social media, but even having just, saying that you also mentioned things about like going on ground and all that, which were like, hey, it's a pandemic, nobody's going on ground, do anything. So maybe, just bear that in mind. And also, apart from just going to social media, maybe there's a lot of like gamers community out there today that you might want to target. So yeah, but I think overall, everyone else that we didn't mention, it doesn't mean that you guys didn't do a good job. Just that, it is quite tough as well to decide. So, I just want to say congratulations to everyone for putting in effort and, and for actually, graduating. So yay, give yourself a hand.
Awesome. Thanks, Shermaine. Maybe Zahan or Kelvin, any other words or feedback? None?
Yep,
Okay.
I'm going to give it a quick go. LandyMax, I really like the business model. I think it is a good mix of detailed analysis with an innovative, somewhat business model from a debt financing standpoint for SMEs, with a tech solution that is ostensibly realistic in terms of its build timelines and execution. And it has a rather decently fleshed out early stage business model and plan. That's the reason I voted for it. And also because the presentation was fun. I really, really like Serhat, actually. It's a personal personal interest for myself. I believe that will be the future at some point for retail, at least to start with, to charge for access to your data. And the execution pieces are interesting. I think it would have been a little bit more interesting if we understood the black box a little more, and that's a discussion we can have. I don't think you had the time to go into it, but I like Serhat and I like LandyMax. So go guys.
Thanks, Kelvin. Zahan?
Well, I guess for me, I think we all agree that the problem statement from LandyMax is clear. We know what you're targeting, who you're targeting, and how you intend to introduce the product. So I think that's good. And for a lot of investors, I think that's very important. And of course, you did a lot of work on that. On the other two, I think I agree with Kelvin. I think we saw a lot of potential in Serhat, but I think the presentation, if you start off the other way around, with how the tech is going to disrupt it, but rather from a not start from a healthcare perspective and then move on from there, perhaps you would have scored a higher point. And with regards to FinCrew, for me, I felt kind of disappointed. Although we did agree that the operating expenditure could be lowered by not having technology. As an investor myself, I tend to shy away if people tell me it's heavy in the front, with little to nothing to back it up from a technology standpoint, which means I can't do much about it moving forward. But anyway, these are all very good ideas. But on top of that, some of the other participants, like Guru, all of them have very, very interesting
ideas, Frederick and Magnificent, right? We felt that if given more time and then given more time to the team to go down to the ground to do the validation, to do the checks, I believe you'll come up with very good products. But not generally, everyone did a very good job, to be honest. Congratulations.
Thanks, Zahan. Congrats, everyone. Maybe Danny.
Yes.
Yeah, Danny, go ahead.
Yeah, sorry, I just jumped back in. To me, I mean, congratulations to the winners, right? But I think more importantly, I like to say something very corny, but I think it's very real. I think all of you are winners. Why? You get to see winners or losers, right? So to speak, not to say loser or non-winners, because the whole idea of a school is to learn, whether it's to learn the good, the okay, or the bad, right? So that you won't repeat it, or you would, learn the good and forget about the bad and stuff like this, right? So you've gone through that. That's one part of it, and I do like to think that all of you would have learned a lot more in this pitching session, whether you want it or not, right? Don't forget that, right? Not to mention the network that we have built during the school and all with the instructors as well as with your own peer. Although you cannot see each other, but I think you're very good in being virtual these days. So I think you've built a lot of network through that way. So I hope you enjoyed the cohort, and it's our second one that we did. From the initial crew. So this one was much more easier to execute than the first one, admittedly. And also thanks to you guys. I think we're getting better at it, and hopefully you can put out a good word on what we're trying to do here. I think there will be surveys done. I think Jenna, Fang, right? Or maybe the surveys have been done so that we can learn how to make it better in the next cohort thereafter. All right.
Yes, thanks, Danny. I think that's very, very true. I think even though it's a competition, but I think the key thing is for you to put practice to what you learn. So some of us actually mentored some of you, and we can see that from your pitch deck from the day that we mentor you to now, it's very, very different. So congratulations everyone for graduating. Finally, we did it. I'm sure that, some of y'all were chatting that y'all will get like a jet lag on classes. We have no classes after this, but we will be actually emailing you. The Slack will be open, and we will have next cohort. Some of y'all have already asked me about your friends applying for the next cohort. So stay tuned on Facebook or LinkedIn. And yeah, that's about it. Congratulations, everyone, for graduating. So we will do a group picture right now. Everyone can switch on their video.